Gogol, you will be very impressed with. Guess why?
What's up?
This weekend I made 38 cents on my $20 investment in Bitcoin.
Wow, that's
I know,
amazing.
right? That's a huge number.
All of 38 cents.
All of 38 cents. I made them. I did not have to work for them. And at one point, I think a couple of weeks ago, Bitcoin fell and my investment had become $14. And my heart, I just clenched my heart because I was like, what if I had invested $200?
Right. I completely understand, but I think this is one of the biggest rookie mistakes in investing. I think as long as you are confident about the instrument, when prices come crashing, you should be confident enough to push more money in. That is how you make money.
And hippity hop, I'll never be a millionaire. Whoa, boom, boom, and hippity zoom. I'm in love, I'm in love.
So, hi everyone, you're listening to the Brownian Notion. I am Gogol.
And I'm Ananya, and today we will be listening to some investing advice from our in house investing pixie, Gogol.
It's not really an advice. I'm still learning. I'm just gonna share some of the things that I have picked up on the way. Hopefully, those things will help you. So, as we were discussing, if you are really confident about the underlying asset, it might be a stock, it might be a crypto, it might be any asset, so to say.
Mm-hmm.
Once you're investing, that means you are like reasonably confident in that instrument. And if you're confident, if the price falls after you have invested, it is just like a you should feel happy about it because you it should make you feel like you have some more opportunity to make money. Big disclaimer, none of these things are any sort of investment advices. I'm just like giving you some examples. So for example, you know TCS, right?
Yeah.
Tata Consultancy Services. I'm very fond of that stock.
Why is that?
Very good question. I think it has a lot of competitive advantages. Let me ask you one question first. So, what do you think is the biggest cost in the IT industry?
I don't think I know enough to say.
I think you can guess. Just think of what do you need for running an IT company, right? You don't really need any raw material, right? There's not like you need to make steel.
Yeah, personal?
Yes, the biggest cost in the IT industry is manpower. If you compare the biggest names in the IT industry in India, you'll see that the attrition rate is basically how many people in every 100 who join actually quit the company every year. So the attrition rate for TCS is the lowest, around 11%. So if 100 people join the company, 11 end up quitting. But if you compare that to its competitors, for example, for Infosys, it's around 21. For CTS, it was around 30%.
So, why, as an investment, should I care about that?
So, as an investment, you should care about that because this is how TCS actually ends up saving money, and a penny saved is a penny earned. So, it actually makes more money because they have to spend less in getting better talent because they already have them. They're not competing with other players with money to get better talent. So, that's why they can make a better return on investment, and that's why you have a better chance of growing your money with TCS. Does that make sense?
Yeah, that makes perfect sense.
So now getting back to what I was saying, the
Yeah.
point was I hold a significant amount of TCS shares. But what happened was last week TCS announced its results, and even though it had like stellar performance according to me, it still somehow missed the expected performance by like a narrow margin.
Okay.
But since a lot of what happens is in stock market, at least in the short term, is speculative. So what happened, people thought that they missed the margin and the price dropped like by 6%. But for me, I see this as a huge opportunity, so I bought a lot of shares.
Is that one of the important things to remember when someone is just starting to invest? Say, for example, me. I know from you and maybe a couple of other friends that TCS is a good investment, and if I see a price drop, that is probably a good time to buy, right?
Yes. First and foremost, the learning here is the moment you think a lot about the price, what it means is you do not inherently understand the business. But price is always a good reason to buy because if you really know that this is a strong business and for some reason prices have dropped, expectation of some analyst wasn't met,
Mm-hmm.
you just know that this is just the market behaving stupidly. It's just a market
Okay.
reacting to speculation, basically. and then you have a very good opportunity to buy. But on the other hand, if you think a certain stock is worth buying because of its price, that's the worst thing you can do. Do you know what I mean?
Yeah, yeah, I
Yes.
understand.
This might work in a lot of Western countries where economies are a bit more matured. So what happens is the companies that actually get listed, they are mostly clean. But in countries like India, there is still a lot of accounting fraud. And because we do not, our markets are not that mature right now. If you just think, okay, this company is showing so much profit, but the share price doesn't reflect that, that means I'm getting the share price, the stock at a discount, I buy it. This is like the worst thing you can do. That means you are focusing a lot on the price. You do not inherently understand the nature of the business.
But the thing is, as an investor, is it possible to understand basics of all the business?
Yes and no. There's a lot of behavioral economics at play.
Okay.
So if you read a book by Daniel Kahneman, who actually won a Nobel Prize for his work on this field, it's called Thinking Fast and Slow. So what we do as human beings, we tend to, whenever an answer to a question is too difficult for us, we tend to replace that with an easier question and answer it. But a lot of times that is the fallacy. A lot of times you need to understand and answer the difficult question in order for you to actually assess the business. You know what I mean? What I'm trying to say is, if, for example, a business A you don't understand at all for whatever reason, you shouldn't invest in it.
Okay.
Even though a lot of people say it is a good business. Because what you're inherently doing is you're trying to replace a difficult question with an easier one. The question is, do I think this company is good and this company has a growth potential for, say, 20 years? That is what I'm investing for, right? I'm not investing on how this company is doing right now. I am investing on how this company has done so far and how I see it grow in the future. That is investing. It's always forward looking. So that is the difficult question. The moment you feel I am trying to read buy recommendations, listen to other people tell me what to do, that is the moment you understand that you are actually replacing the difficult question with an easier one.
But what is the disadvantage of doing that, is my point. Personally, I don't think I will understand the business enough ever. So, when can I stop researching and start investing?
It is okay if you, I don't know, blindly trust somebody. For example, my dad, right? My dad, he's very astute investor, I would say. Although our investment philosophies are very different, he's a very risk averse person. But I would completely trust my money with my dad. What I would not trust him to do is to grow my money at the rate that I want it to grow. But the main problem with listening to advice from a huge array of people is that a lot of times they're not working in your interest, they're working for their own self-interest. So that is one point. And the other point is, you are inherently buying something that you don't know anything about. So you will never get the confidence in it. So this is what you already felt with Bitcoin, right?
Yeah.
Because you inherently do not understand the value of Bitcoin, or the lack thereof, scared when the prices fall. It's a very shaky feeling. Sleeping at night is much important than making money.
No, the thing is, I didn't feel scared weirdly, like as much as maybe again, it was a small amount.
Yes, just think, if you had invested at
Mhm.
$10,000, wouldn't you feel scared?
Yeah, I mean, I don't even have to go to the point of 10,000. Had it been just 10 times of what I invested, 200 or something,
Exactly.
that also would have been like scary.
Exactly. So this is what is the most important thing. So that I have, for example, invested n number of X amount of money in TCS. Even if TCS falls 6%, for me it feels like, oh my god, it's more opportunity for me to make money. If I put in more cash right now, I'm pretty sure I am getting like 6% more return on my investment, because I am inherently confident in the business, in the management, and I know what they're doing.
You did cover this a little bit already. What are some of the things to remember as an investor like me who is barely getting started? Other than, definitely researching the company, like you already said, what are some of the basic things to remember? Or what are some of the basic things to say read?
Yeah, that's a very good question. Again, I'm not a seasoned investor. I'm also learning. And also the investment philosophy might differ from person to person. But from what I have developed for myself as a philosophy, I feel the first thing is to fight your sense of FOMO. The moment you feel FOMO and you end up investing somewhere, you increase the risk of losing money by say tenfold. Never invest money into something just thinking, okay, other people are making money, I want to make money here too. That's a very bad reason to invest. The whole idea of I have to do do something as soon as possible doesn't work for the stock market. And there are a lot of these counterintuitive things which actually really make you wealth in the stock market or in a lot of other financial instruments as well. This is one of them. And the second thing is, this is the most counterintuitive thing, is we as human beings, we feel to make the most out of something, we have to put in the most effort. In the stock market, it's actually the opposite. Of course, you have to do a lot of effort before choosing a company, before picking a stock, but after that, there is very little to do. Stock market actually disproportionately favors people who do not do anything with their stuff. They just keep it like that forever. Once you have identified a business that you are relatively confident in, it might be the management, it might be the finances, it might be whatever it might be. You invest money and then you stop looking at it. That's it. Also, if you see, the people who lose the most amount of money are the ones who are trading, who are buying and selling every day. So this is also something which is very counterintuitive for us human beings, because we think for making the largest amount of profits, we have to make a lot of changes, like micro adjustments, like I have to like read up economic times every day, I have to like buy stocks and sell stocks every day. It doesn't work like that. You read up on a stock for like 6 months, 5 months, and then you slowly
Hmm.
gain confidence in it, and then you invest a lump sum of money, and then you just sit. That's it. This is the second point.
Okay.
The other thing is, I would say, you have to stop comparing like what other people are doing versus you. Like, of course, you read a lot of things, you listen to a lot of things, you can get ideas from a lot of people.
So where can you get these ideas from? I'm asking because, like what are your recommendations where people should take basic investing advice
You
from?
can look up all these websites. You can go to Money Control. You can go to Economic Times. You can go to Bloomberg Quint. Like, I'm of course talking for the Indian context. There are so many different platforms that give you information for free, but I only go there to get some contrasting ideas. You make the most amount of money by taking contrarian calls. What do you mean by contrarian calls? You have to go against the market. Whenever the market is crashing, you have to put money in. Whenever the market is booming, you can take out money, but I would also not say take out money, because I don't believe in trading. Again, TCS, right? It's a contrarian call.
Hmm.
The market is clearly saying sell the stock because it's falling. It has fallen like I think 7% in the last 3 days. So urge of the market is to sell the stock, but the contrarian call would be to buy it. But that doesn't mean you pick up something very shitty like Yes Bank and then say, okay, everybody's selling Yes Bank, I want to buy it. No, it doesn't work like that. It's not a universal thing. I'm talking about quality
Okay.
stocks.
So it's not a one size fit all situation that just because the price of a stock drops, it doesn't make it a good stock to buy.
Not necessarily. If you are already invested in the company, I'm not saying invested money wise, but invested as in you believe in the company,
Like philosophy wise.
philosophy wise, then a price drop is just another opportunity to make more money. This is to answer the first part of your question. The other part, what to read, yeah, so there are a lot of things that people suggest, but personally, Indian markets, Indian economy is not that developed yet, so Western investing books do not really work in the Indian context. But there are very nice behavioral economics books, very nice history books, very nice anthropology books that actually teach you about our human civilization, developed societies gotten to where they are, and by all likelihood, India would follow them. You can read Thinking Fast and Slow by Daniel Kahneman, Misbehaving, Making of a Capitalist. Yeah, these are some of the books I would recommend. And from the Indian context, you can read books written by Saurav Mukherjee, this investor portfolio manager in India. There's The Unusual Billionaires, there's The Coffee Can Investing. You can read also his new book, which is called Diamonds in the Rust. I haven't read it yet, but I hear it's a very good
Mhm.
book.
As an investor who has been investing for a little bit of time,
Yeah.
what are some of the mistakes you made?
When you start investing, right, you are constantly bombarded with a lot of noise. And
Mhm.
also, Noise is a book, I think, also by Daniel. It's a new book by Daniel Kahneman. It's also a very good book. So you're constantly bombarded with noise. Everybody will tell you their own different, like, buying recommendation, selling recommendation. I don't know, for some reason, they will tell you, okay, because Trump is losing the election, our stock market will crash. So you should do this. So you should do that. So this company you shouldn't buy because this is just just too expensive right now, and when it will crash, you'll lose all your money. So the problem is that you end up losing your own focus by that. That's why I said only read these things when you are very clear of your own philosophy, because otherwise you'll just get confused. So for example, my biggest mistake was that I looked at Bajaj Finance. Big disclaimer, this is not a buy call, but I saw Bajaj Finance and I saw that there was a lot of potential. But there was so much noise around me saying, okay, Bajaj Finance was so expensive that I didn't invest in it. It has, I think, tripled in 1 year, the stock.
Wow.
If you read reports by analysts, they would just tell you this is an overvalued stock. If the stock market crashes, you will lose all your money. But then it's like saying if my grandmother had wheels, she would be a motorcycle. It doesn't make any sense.
You're saying that it's important to go with your gut. Like do your research but also go with your gut.
As long as your gut is based upon solid research,
Some research. Yeah,
yes,
yeah,
go
yeah.
with your gut.
Yeah.
Don't wake up one day and say, okay, I feel like buying this. That gut we don't want.
Like even if you feel like that, you should do some research before
Yes,
you actually put
yes,
money in it.
yes. So what I do is when I look at these sites that I mentioned, or when I look at these buy calls, sell calls, what I do is that I want to look at companies that I do not know about otherwise, so that, okay, they talk about cams, for example. I think I hadn't heard about cams before that. That was a very nice thing for me, that I got to know about this company that was almost operating on a near monopoly. Although at the end of the day, I decided not to buy the stock. You know what I mean? Like,
Yeah.
it's my decision. It's not like because I didn't know.
Yeah, yeah, yeah. And so this is which I guess I have asked you before, but just for our listeners, what are some of the good platforms you recommend for beginners to start investing? Or do you think platforms are not a good place? You should actually get in touch with a broker.
No, see, the platforms are brokers. They are just digital brokers. It's all the same. A lot of the times, if you have this buy and sell button written like in big bold letters in front of you, just feel you get a bit click happy. You just feel like I need to do stuff. And as I said, it's a very non-intuitive thing that not doing anything actually makes you the most money in the stock market. And that's why I think it's a bit like harmful to have all these things in your on your fingertips. But like, again, this is from my opinion, my philosophy.
Yeah. So it's a good take on psychology as well, right?
Yes,
Like it's like having an Amazon account. Chances are you will online shop a lot.
exactly.
Yeah. Just the accessibility of it can be scary.
Yeah, but other than that, I don't feel that any of these things are inherently better than the other.
So, Gogol, you gave us some really good advice. It is beginner advice, and I really appreciate it because as a woman, I was given almost no amount of
Hmm.
financial literacy,
Right,
right?
right.
And I feel like with some men, at least in Indian society, that is slightly different. What advice will you give to your women friends who have absolutely no clue? And how can they get started being financially literate, understanding how to use their money, stuff like that?
Inherently, my advice wouldn't be very different from what I would give my guy friends. But since there is some sort of a barrier to entry, so to say, I would say just take some time, get acquainted with the whole thing. With whatever you want to do. If you want to invest in the stock market, you just
Mm-hmm.
take some time to just listen to people. As I said, there is no right time or wrong time. It's not like because everybody's investing, you have to invest right now. It's
Mm-hmm.
not like there's a chain that you're missing. This doesn't only apply for investment, but I feel the best way to approach something daunting is to break it up into smaller tasks, right?
Yeah.
So what I would suggest is, for example, try with a very small thing.
Mm-hmm.
Say mutual funds, right? Mutual funds is something that most people do nowadays, like at least in our socio-economic state. But how many of these people do actually know what mutual funds are, or even what they're investing it in, their investment philosophy is, or who their invest fund manager is, or how much rotation or churn they're doing in their portfolio? A lot of people do not know that. So that is how I did. So even though you're right, my dad did have a lot of we had a lot of conversations about finance matters, so to say.
Yeah, and I feel like I, as a woman, never had that.
I asked my dad what to do, and then he said, you should decide on your own. So I said, okay, I want to put my money in this mutual fund. And then he asked me why. And then to convince him that this mutual fund is good, I actually read up a lot on that mutual fund. And then I realized that, maybe I could do better than that. I have to. So the main problem with mutual funds, these funds are like really huge.
Mm-hmm.
Like, for example, if you are managing, say, 10,000 crores, it is very difficult to focus on like two, three stocks, right? But I don't have so much
Mm-hmm.
money. So I can easily pick stocks that give me the most return. And I do not have to bother about the stocks that are kind of mediocre, which just get bought because the fund size is so huge, they don't find quality stocks to invest in anymore. So this is what I figured out when I was researching, because I wanted to convince my dad. And then that is how I went into the whole investing process. Something that the female colleagues of ours could do, like just read up on whatever finance instruments they're buying. It might be gold, like gold bonds. It might be doing FDs. It might be doing insurances. It might be PF, Provident Fund. They should start figuring out more about what these instruments really mean. And because, of course, if they're earning, they're also paying taxes, right? So they would have to know a bit about how to save taxes, how to make their money work more efficiently. And I think then wet your feet in the water a bit, like delve little bit into it. You just feel that fear or the dauntingness of the whole task become much more approachable in a way.
As a person who is also a rank beginner, I have some advice with respect to where I get my
Okay.
information
Okay.
from. Of course, having friends like you who are happy to share their research really, really helps. And before that, before I even spoke to you, I would listen to Girls That Invest. I still listen to them, even though some of the advice doesn't pertain to me because they are in New
Okay.
Zealand. So it's more New Zealand, Australia based, but the basic philosophies are something which I really like. Like, I did not know anything,
Mm-hmm.
and by that I mean anything. And so it was a good starting point. So shout out to their podcast.
Nice.
I also liked the videos you share. So do you want to name those YouTubers whose videos you have shared with me?
Yeah, also, again, disclaimers, I don't follow them blindly. It's just you have to develop your own philosophy, right?
Yeah, yeah, yeah. But I'm just saying, like, for just for the sake of listening to learn.
Yes, so basically there are a bunch of stuff. There's a very nice YouTuber called Akshat Srivastava. I listen to a lot of what he's doing because I think he's a very astute and talented investor. Although I don't agree with a lot of his positions.
But what I like about him is he explains why he's doing a certain thing.
Yes, exactly.
Then you can decide if you want to do that.
Yes,
Yeah. Yeah.
you actually hit the nail on the head, because a lot of the fund managers and a lot of these gurus, so to say, they would tell you a lot of their advices in a way that, okay, they have some sort of magic formula.
Right, right.
They have some magical insight that they're using, and you as a mere mortal will never get there.
So you better listen to me or like just bugger off, basically.
Yes, bugger off, exactly. And yeah, Akshat really breaks it down and explains. You can disagree or agree with him. Like a lot of things, I disagree with him. And but for you to understand where you stand, you have to have
Information.
information and contrasting information.
Right,
If you
right, right.
just
Yeah.
have like a confirmation after confirmation, you just get into that bubble. You're like, okay, I'm the
Yeah.
best. You have to understand that there are other contrarian views to you.
Yeah, and that's what I like about Girls That Invest, that they are trying to break down the finance bro culture. Like, they're like, there's also space for women, and you can absolutely do this. We will tell you where to start.
Yeah, that brings
Basically.
me to a female YouTuber called Rachna Ranade. She also does a lot of education stuff related to investing. I do not agree with 90% of what she says, but I really like her opinions, which help me develop my philosophy into a much sharper thing. And then there are these people that I really like listening to. There's Uday Kotak, basically the world's richest banker. He's the founder of Kotak Mahindra Bank, and he is a delight to listen to. There's Harsh Mariwala Saab, who's the founder of Marico. There's Saurav Mukherjee that I've talked about multiple times. He's the fund manager of Marcellus Investing Managers. Conversation from these people. There's a series on Bloomberg Quint, which is called, I think, Alpha Muggles or something like that, where a lot of these fund managers come and talk about their investment philosophies, basically. And I really like listening to them. And last but not the least, there is Parimal Ade, Yadnai and Investment Academy. Again, I do not agree with more than 90% of what he says, but
That is like your disclaimer for all your sources.
Yes, but I think that's very important. I'm also against censorship of a lot of things in life, because I feel if you censor something just because you feel it's not right, it doesn't
Mhm.
help other people to develop their sense of right and wrong.
Yeah, yeah, absolutely. And I think it is important to remember, especially for female listeners, that just because someone is giving you advice on the internet does not mean you have to listen to it. You can listen to it and then learn from it and then decide what you want to do.
Exactly.
Because after listening to Girls That Invest, I have realized that I also don't agree with everything they are saying, but they taught me whether I can agree or not. And
Exactly.
that was important.
Exactly. And that is the biggest thing you can learn, is to think for yourself.
Yeah, absolutely. Thank you for the advice you gave us. This was wonderful. I learned a lot, and I now have sources I want to go back to.
And thank you for the wonderful questions. Your questions were,
Those are the basic
no, no,
questions.
really on point.
We would like to discuss things like crypto after this, but if our listeners have any suggestions, please feel free to tell us on our social media or our email. They're all open.
Or specific questions you want answered, if we could. I mean, it's not like,
Yeah,
yeah,
absolutely. We can do an
yeah.
AMA with if we have enough questions, and that would definitely help us build a good episode for you.
We bop and hippity hop. I'm as happy as